It's 7 a.m. and ticker LASE has just made a big move after my pre-market strategy entered on the 7 a.m. candle. Let's watch this trade live. Talk about first and most importantly, how we found the trade in pre-market, and secondly, how the strategy works with both its entrance and multiple exit conditions. Over in my Discord server at 7 a.m., LASE was alerted. So I was made aware of this move immediately as soon as it started happening. So I was able to enter at the close of the first 5-minute candle, which is what my strategy does. Obviously, we'll talk about those exact entrance conditions in just a minute, but we're able to find the trades once again because of an alert from Discord. There are currently 389 members in this Discord server. That's just a lot of eyes on the market. Basically, every single time a stock starts moving, especially in pre-market, we are made aware of it almost right away. Also, I am running a YouTube live stream in here. You can actually see LASE is the stock being highlighted up in the top right. So that is also being hosted here in this Discord server for something else to keep an eye on. This is the most important part of pre-market trading, is being able to find the moves, because you have to be able to locate them quickly. You have to be made aware of the move as soon as it happens, if possible. I'll talk about how you can access that Discord server in just a minute. First, let's hop back into the trade because we've now gone into a new 5-minute candle, and that is the first thing I'll bring up about the strategy. I trade this on the 5-minute time frame. Of course, meaning that every single one of these candles represents 5 minutes of trading. Now, the actual conditions, like the actual logic for entrance on the strategy, is very simple. It's pretty complicated to build in code. This is actually one of my more complex trading strategies because it has to do a lot with timing, and coding timing is difficult. But really, the strategy enters on a large increase in bullish volume, but only a large increase in bullish volume either at the top or bottom of the hours, meaning either at 7, 7:30, 8, 8:30, etc. And it will also do that in after hours. So it'll enter at 4, it'll enter at 4:35, etc. This strategy works for all extended hours trading, not just pre-market. So anyway, LASE obviously got a very heavy bullish volume spike relative to its previous volume. Thus, the strategy entered on the close of that candle. I set up my timing like that because companies announce news in extended hours trading, and almost exclusively do they announce news either at the top or bottom of the hour. So my strategy is set up to catch that wave when there is a, once again, bullish volume spike at the top or bottom of the hour. It almost always means that news was announced on the ticker, and the job of the strategy is to get in as soon as possible and attempt to ride that strength. Once again, that is why it is necessary to know about moves immediately, as fast as possible, be made aware of moves happening in pre-market. And you can access my Discord server from my website, daytradingstrategies.net, at no additional cost, but when you sign up for the annual plan. So this is going to give you 12 months of access to every single one of my custom codes in ThinkorSwim, of which there are currently over 150, and of which I am adding multiple new codes a week. But also, and maybe even more importantly, it gets you lifetime access to the Discord. So even if you decide to cancel your plan, whatever, you're not going to be removed from the Discord server or anything like that. By the way, and maybe I'll show off some more codes later, but this pre-market trading strategy, this sort of buy icon that you see here that is simulating the entrance and giving you the back-tested statistics of such, so that you can prove what entrance and exit conditions work to properly align with your personal trading goals. This is obviously one of the 150 plus codes that is available over on the website. So if you're interested in the codes, if you're interested in the Discord, daytradingstrategies.net will be linked in the description down below. Anyway, we are still in this trade. We are taking a $2,000 position. That is what this 475 number means below buy. That is how many shares the strategy bought on almost, and I think maybe every single one of, I tried to on every single one of my strategies. I added an input parameter for buying power. So you can easily come in and adjust the strategy to whatever size you typically trade or would like to trade with this strategy. So it sort of works as an automatic position size calculator as well. So we bought 475 shares at $4.21. We got a move already up to $4.93. However, we have not yet exited the trade and we are currently getting a pullback. So let's see where it goes from here. So that candle did close red. However, got a pretty nice bounce on the bottom, got a pretty nice hammer formation going on here, which means that buying power stepped in, and we of course have also not yet exited our trade. This candle never dipped enough, really never anywhere close enough for us to look to get out of this trade. So let me go over the first exit condition of the strategy, and that will be our profit lock. So when the position is green, obviously when the stock is currently trading above our entrance price, the exit condition is the first candle to close below the lowest low value out of the previous 5 candles. So right now, that is really non-existent because that would be back below our entrance price, and that would come our stop loss into play, which is a different exit condition we'll go over in just a minute. But once we get a couple more candles in here, you will obviously start to see, say we don't break below this level for the next 3 candles, this level here, 452, will become our lowest low out of the last 5, and that will be our stop loss. Really, I put nothing but a trailing stop on this strategy. Look, it's a continuation trading strategy. We are obviously buying high here, right? We are sort of chasing that first sign of strength and looking for it to continue. In my buy high, sell higher continuation type trading strategies, I almost never have an upside target. If the purpose is to, once again, I'm going to keep repeating myself, but if the purpose is to buy high, sell higher, let the stock get as high as it wants to, right? Like, don't panic on this first pullback below 460 because, wow, as I'm recording this here, the stock has now broken up over $5. It's too many traders. This is the number one problem with beginner traders and why beginner traders don't make money. It is the need to close that uncertainty and the need for immediate gratitude. They get in at 420, fantastic entrance. Obviously, now that the stock is trading above $5, fantastic entrance, but they get this move up to like 460, 470, or even on this pullback, they go, oh my gosh, it's time for me to lock in my profit way too early. And they feel good about it, right? Because maybe you made, even at this point, you were up $230 on a $200 position. So maybe you feel good about that. Yay, yay, yippee. But now you could be up $380, which is what the trade is currently up on this position. Cutting your winners too early is no different than taking a loss. It doesn't feel that way, like mentally, obviously it doesn't feel that way. You'll never go broke taking a profit. That's what everybody tells you, but that is an awful way to look at trading. You need to be getting what you're supposed to get out of your winners according to the strategies that you've proven work. Now, listen to me. I'm not saying at all that like maybe there is a strategy that said to buy here and to sell here at 480. And that would be perfectly fine as long as you've proven to yourself in back testing and then obviously in forward testing afterwards that is a profitable strategy over time. If that is your profitable exit condition, then yes, by all means follow it, right? But the profitable exit condition for this strategy, once again, is to hold until it breaks the lowest low out of the last 5 candles. So you cannot then go and break that rule. You cannot then go and exit this trade at 460 and only make $280 when you're supposed to be up $380 in the position. It doesn't matter how, and I'm sort of ranting now, but this is a very important topic of conversation, and the stock is pushing highs, so you have something fun to watch anyway. But I could give you the best strategy in the world. Hell, I have like over 50 or 40, something like that, published on my website that I have proven to look good, at least in back testing. It doesn't matter if you have those strategies if you don't have the right psychology to actually follow them, right? If you're just locking in profits way too early, you are not going to make enough money in your winners to offset your losers. Because yes, obviously we are in a nice winner now, and hopefully I don't jinx it because this could still very easily turn around. But this strategy is going to lose. It's going to lose a lot. That continuation trading strategies especially have pretty low win rates, something like 35-40% this strategy has. So the point is you need to be getting what you're supposed to be getting out of your winners in order to offset your losers. That makes the strategy actually profitable over time. Anyway, let me stop ranting, but once again, please spend more time studying psychology. It's very, very important. Look up anything you can find by Mr. Mark Douglas, rest in peace, but anything you can find. He has hours and hours of free seminars here on YouTube. He taught me basically everything I know about trading psychology. He's a very great psychology professor. But anyway, go look up Mark Douglas, learn trading psychology. And the point is, hold your trades the way you are supposed to hold them. Do not panic. Do not exit early. Get what you're supposed to get out of your winners. And in our case, this is to hold until the first candle breaks below the lowest low out of the last 5. All right, well, I said earlier that I wanted to hopefully get a chance to show off some other codes of mine. Well, it looks like here on this pullback strategy, I'm going to get that chance. Sorry, on this pullback candle, I'm going to get a chance to showcase to you my pullback strategy. This is called my Takashi Dip Buying Strategy, and its entrance condition is that if there is a red candle larger than the average volatility of the last 14 candles, the strategy buys. And the exit condition is the most simple exit condition I have on any of my trading strategies. It is to simply sell the close of the next candle. So here, obviously, we got a pretty large pullback candle. The strategy has entered, once again, a $2,000 position at about $4. Yeah, at about $4.78. And it will exit no matter where this next 5-minute candle closes. The idea here is that when you get a larger than average volatility red candle, the next candle has a greater than 50% chance to be green. We'll see here in a few minutes if that is the case on this candle. And by the way, our pre-market strategy did not get stopped out on that candle because, of course, it did not break below the lowest low value out of the previous 5 candles. So we are still in this trade as well. So we're looking for a bounce. Obviously, we're looking for a bounce, but now for both of these trading strategies. All right, there's now 10 seconds left in this candle, and as you can see, we did in fact get a bounce. Now, we didn't get a big bounce, but it looks like we're gonna make about $25 in that trade. I mean, what, $25 on a $2,000 position in 5 minutes just on simply buying a dip and selling the close of the next candle? I mean, really the easiest strategy there is. I guess you wouldn't complain about it, right? And obviously the idea and what will happen to you sometimes, I wish I could show you a better example, but that's live trade examples for you, right? Sometimes, obviously, you're going to get bigger bounces than this, but as you can see, the strategy has gone ahead and exited at the close of this candle, locked in the little bit of profit. And obviously, coming back over into our pre-market strategy code here, you can see we are in fact still in this position. So let's see now. Actually, let me show you what is the next 1, 2, 3, 4, 5. So these are the last 5 candles. So our stop loss now moves up to the low of this candle. Obviously, if we don't break this and close below this in this candle, then our stop loss will move up to this candle. But let's see where we go from here. Seems like this stock is losing a little bit of momentum, volume's falling off a little bit, but I've been in just so many trades like this that, it's like, it's done. Maybe not much is going to happen anymore. It looks like maybe momentum has moved on to something else, and it still has ended up exploding. So never say never. Let's see where this trade ends up going from here. All All right, well, this candle closes here in 2 seconds. Oh, and wow, actually, the whole candle was like pretty weak, kind of just chilling. We actually got a little bit of a push there in to close. But now, since we are on to this candle, our previous 5 are 1, 2, 3, 4, 5. So we take the lowest point of that being this candle here. Our trailing stop loss has now moved up to $4.69. Of course, the candle needs to close below that line for us to get stopped out. Let's continue to watch what happens. Now, while we wait and continue to watch the pre-market day trading strategy, I want to go back to the dip strategy. We got to watch one live trade of that. It was small. It made something like 25 bucks, whatever. I want to show you a better example of the point of that strategy. So this is on ticker AMOD. This is just from a few days ago. Here at the bottom of the hour, must have got some kind of news, traded 176,000 shares here and began its run up. Actually, I'm sure my pre-market trading strategy got in at the close of this candle and took a really nice profitable trade on this as well. But for now, I want to focus on the dip buying strategy. So obviously, got news, run. Then you get a large red candle. The red candle here has a volatility that is above the average volatility out of the 14 bars before it. By the way, there is an alert built into that strategy code. I don't think you got to see it on the live trade, but when you are watching a ticker and when you are running this strategy, if there is a red candle larger than the average volatility of the ticker, a ding sound goes off. You get a little message up here in the top left. So you are made aware of it before the close of the candle. Hey, if this candle remains obviously at this level, it's going to be a buy. Anyway, in this case, this of course was a buy, and here you got a very nice bounce. Once again, on just a $2,000 position, you made $260 in this trade. And I sort of want to show this trade for an example of an A plus setup. This is when I really like to use this strategy on the very first red candle after a large run up. Like you get sort of, hey, there's pre-market news, the stock is very volatile to the upside, and then you get that first big red candle. That is the A plus setup of this strategy. And anyway, I just wanted to show you a better example of it. All right, and coming back now to our pre-market trade, there is 5 seconds left in this candle, and it does indeed seem like it's going to close below the lowest low of the last 5 candles, in which it does, and we end up getting stopped out of the position, end up still making $200 on a $2,000 position. Still a 10% trade, nothing to like go crazy about, but I mean, you'd be pretty, if you were only trading a $2,000 account, you've made $225 today trading both this strategy and the Takashi Dip buying strategy. And guess what? It's only 8 o'clock. We just hit 8 o'clock. The market doesn't open for another hour and a half. And really, you could close up shop and go about your day now at this point. Right now, I really wish this didn't happen in this trade. I mean, obviously, I want to make more money. I want my strategies to be more profitable, but we had the conversation, we had sort of the long rant about how you need to hold on to your winners and follow your strategies and blah, blah, blah. And now someone in the comments I know is going to be like, well, Trey, why didn't you just lock in profit when it was trading up above $5 a share and you were up over $380 in the position? But a trade like this is why you hold. And actually, this is a great example because this is an after hours trade. This ticker a handful of days ago, TELO, must have got some kind of 4 p.m. news, which is also something obviously that the strategy will trade. This is not just a pre-market trading strategy, although that is what I call it on my website. It's really an extended hours trading strategy because companies will announce news at the top and bottom of the hour and after hours, just like they will in pre-market. Anyway, this ticker must have announced some kind of news at 4 p.m. Obviously got a huge bullish volume spike relative to the volume before it. So the strategy entered. And then just look at the move that this stock makes. And companies do that. I mean, the reason why we target extended hours trading is because companies do this all the time, like especially when pre-market and after hours is hot. Like there will be phases of the market where pre-market and after hours is hot. There will be multiple stocks up over 100% in those times. Well, if you got into this position, and someone's still going to look at this and be like, well, Trey, you still could have sold here and made $1,800 instead of only making 1,100. You can't think like that, because if you would have sold, look, if you would have sold this candle here, if you would have sold this candle, you also would have sold this one, this one, this one, this one, and this one, right? There's no way that if you were to look to sell a candle like this, that you wouldn't also sell a chart like this, right? You're still taking profit way too early, once again, versus what you have proven to be profitable with the strategy. I really don't like when beginner traders, once again, it's always beginner traders, look at a chart like this and go, oh, well, Trey, why didn't you just sell the high? Because I don't have a time machine. That's why I didn't sell the high, right? It's the same thing as like when people maybe go and look at like let's go look at like the Nvidia daily chart. Sorry, I still have my strategy running, but they'd be like, oh, well, I would have just bought here at 90. No, you wouldn't. You would have bought like at 120, 115, whatever on the dip on the way down too. You can't look back at the past history of charts and just like assume you would have bought the low and sold the high, because you wouldn't have. You just wouldn't have done it. Maybe you get lucky 1 out of every 100 times, but normally you just wouldn't have done it. So you need to build a kind of strategy like this that allows for you to let the strength run for as long as you can, but also get out on the first sign of real weakness, because you don't want the stock really pulling back and giving up all your gains either. Like, of course, that would be ridiculous if you let a stock like go up this much and then give up all your gains, but you have to find that balance. And the exit strategy that I use, and this is just one exit strategy. I actually still have 2 more to cover, because of course we need to go over stop losses, because of course, guess what? The strategy takes losers sometimes as well. But once again, just, and I know I'm ranting a little bit in this video, but very, very important topic of conversation. You must follow the strategy that you have proven works to a T, unless what was the point of doing all the testing and all the work of the strategy. So here's a trade that didn't work. Once again, every single strategy on my website will take losers. Every single strategy you learn will take losers. I never want anybody to watch my content, or I never want to like try to sell my website as this golden egg and you'll never, like, no, of course you're still going to take losers. The idea is that you have stop losses built in to keep the losers smaller than the winners, right? Well, the stop loss for this strategy is pretty similar to the profit lock in that we wait for a candle to break below lows, but if the stock is below your entrance price, so once you are red in the trade, rather than waiting for the stock to break below the lowest point of the previous 5 candles, it sells when the first candle closes below the low of the previous candle. So same idea, just a simple price action stop out on the first sign of weakness, except it tightens up the definition of that first sign of weakness. When you are green, you really give the stock a little bit more room to breathe. Look at the low of the last 5 candles, give it room to work. When you're red, don't really give it that room. As soon as you get candle under candle, go ahead and exit the position. Once again, keep your losers smaller than your winners. Actually, you can see here on this ticker that the floating P&L over the last 30 days is still green, even with this red trade within it, right? The third exit for this strategy is, of course, market open, or 8 p.m. if you're in an after hours position. This is a extended hours trading session. I don't want to hold for a second after market open. So I've also coded into the strategy, if you are still in the position going into 9:30, go ahead and sell the close of the last candle before market open. 2 more subjective rules to lay on top of this strategy, and they can both be showcased by these 2 losers on DHAI from a few days ago. 1, make sure it's a real volume pop. Like, make sure it's an actual significant volume pop. Like, I have built into the code, yes, if the volume is trading, I believe it's like 3x larger than the average volume out of the last 14 or whatever it is, enter the trade. That happens here on DHAI at close, because at 4 p.m. you do get a sizable volume bar versus the last 14, because this stock basically trades no volume for some of those bars. However, it had like already sort of had its pop back here during market hours. So this isn't even like above local highs in volume. That's not like a real significant volume pop or anything like that. I wouldn't enter this trade. And that sort of ties into the next one. Don't enter if like the move has sort of already started. Like, yes, once again, we're at the bottom of the hour. It's 4:30. So there is still a check there. Hey, is there heavy bullish volume? There must have been in this candle. So the strategy, go ahead and enters. But you need to apply some subjectivity to this because in ThinkorSwim, I can't code for it to actually check if there is news. So I just have built this strategy once again for timing checks at the top and bottom of the hour. But you need to actually like make sure there is an event, like make sure something happened with this stock. You can actually, if I turn on my show sidebars here, you can actually turn on and off this little live news modal, and that will show you the current news in real time for the ticker that you are charting. This is a great way to make sure that like, hey, something is actually happening with this stock before I enter this trade. It's not just like what happens here, just sort of a random dead volume spike. Like this isn't like a real significant pop on news. Something's going on. Like this is just some chop. My strategy, once again, is only built for volume checks at top or bottom of the hour. There is a little bit of subjectivity. You do need to make sure that that pop has a reason and actually has significant volume behind it. Remember, if you want to access any of the strategies that you've seen in today's video alongside over 150 plus other custom coded ThinkorSwim strategies, stock scanners, custom scanned columns, studies, conditional orders, etc., etc., and if you would like to join the Discord that already consists of over 390 members so that you can be a part of the conversation and never miss a move again, then head on over to daytradingstrategies.net, which is linked in the description down below this video. Click on the unlock 150 plus codes now button and sign up for the annual plan. Yes, I know it's $400, but think about what you're getting here for $400. The context in which you spend money is very important. Immediately, you're going to unlock 160 plus codes in ThinkorSwim. Not to mention, you're also going to get access to every code I add over the next 12 months, of which I typically add multiple a week. Not to mention, you're going to get lifetime access to that Discord server, lifetime access to a room full of people talking about what stocks are moving at the current point in time. I receive feedback like this almost daily at this point, that people are paying for their membership using just one code, or even like in this case, in just one trade. So head on over to daytradingstrategies.net. You can even check out the free codes while you're there to get an idea of how easy it is to import and run the codes from my website into your ThinkorSwim. Maybe read the reviews while you're over there as well to help decide for yourself if this is something that could help accelerate your personal trading journey. And once you decide that it is, head on over into the annual plan and sign up to become a better trader today.